Good afternoon and welcome everyone. I'm Brian Wiener, Vice President and Head of Product at Visa Canada. Today we're going to be talking about the bright future of installments in Canada. I will speak for about 10 minutes, and following my presentation, there will be a panel of payments industry leaders from CIBC, Desjardins, Scotiabank, and Global Payments to discuss this evolving trend, how the industry is adapting, and how important it is for us to get it right in Canada. It's important for us to get it right because installment payments represent an enormous segment of the payments ecosystem globally. And it is growing. It is growing rapidly. And it is growing rapidly here in Canada, where we expect the installment payments opportunity to be about $50 billion annually. Before we get into it, it is important to contextualize what we mean when we speak about installments. There are three types of installments transactions. Pre-purchase transactions, where consumers get pre-approved access to funds so they can plan for purchases. During purchase, where installments will be presented for purchases at the point of sale for cardholders that meet specific eligibility criteria. And post-purchase, where consumers can convert a purchase into installments immediately after having made the transaction. While each option can work, we're very focused on the during purchase solution because this is the type of solution that has achieved the greatest adoption in markets around the world where consumers and merchants have embraced this form of payment. We will come back to that in a few minutes. Here in Canada, market conditions are creating an environment for disruption. And this is paving the way for an installment solution to thrive. Let's go through those reasons. First, new entrants with global platforms have come or are coming into market, in addition to existing platforms that are already here, and are challenging traditional bank and processor relationships, which is motivating the ecosystem to innovate. Second, there is rising consumer demand for installment payment options, in particular with affluent consumers. Third, the competitive environment has never been greater, and merchants are demanding tools to increase basket size without creating friction. And lastly, checkout experiences have improved with the rise of contactless payments in store and with improvements to the digital experience online such that the checkout process is much shorter than it used to be, leaving room to introduce an installment selection step either in a face-to-face environment or online. It's interesting how rapidly consumers are adopting installments, or otherwise referred to as buy now, pay later solutions in mature card markets. In mature card markets, buy now, pay later, as it is called, was traditionally an option that was offered more on the fringes, layaway plans, very big ticket items, things like that. In less mature markets, it was a much more popular option, and it continues to be a more popular option at the point of sale. But we've seen an explosion of interest in more mature markets, particularly among households with higher income, as I mentioned earlier. As you can see on the screen, comments from Shopify and PayPal say it all. This whole segment is full of surprises. We began tracking installments use in Canada in 2017. And we were surprised at the level of interest here at the time. We ran the same study again in 2019, and the numbers just became stronger. Installments has always been popular with the younger audience, and this continues. However, the biggest increases since 2017 have been in the Generation X, so the 40 to 54-year-old age bracket, and Boomer generation, 55 plus segment. We attribute this acceleration of interest among Gen X and Boomers to the increase in entries to the market that we've seen in the last few years, either from the fintech community or from banks such as CIBC that have launched post-purchase solutions. Installments have become commonplace across home improvements, auto parts, travel, health and fitness, and other categories. The market is clearly shifting. But at the end of the day, merchants just want to sell things. Consumers just want to buy things, and they all want to transact with confidence and peace of mind. But there are many providers in market. The question is which option makes the most sense? And the answer may vary from person to person and transaction to transaction. It can all be a little bit confusing. And this is probably why Canadians have a strong preference for installment options from banks and networks. Over 2 different surveys at 2 different points in time with 2 completely different sets of people, Canadians overwhelmingly indicated a preference for installment options from their bank, followed by their network, even though third-party providers were making the biggest splash as a new entrant in the market. And the question is why? There are several answers, but at the top of the list is trust. The primary strengths of credit card issuers and payment networks, trust, privacy, security, are the main barriers to using third-party providers. In addition, using a third-party provider means something else to track. Another loan to remember that's over and above any other credit facility I may already have with my bank or my card issuer. With multiple loans at multiple providers, you can easily see how a consumer's overall borrowing could become a little unwieldy to manage and, frankly, risky for the consumer. And last, using a third-party provider means another loan application, friction at the point of sale, and somebody else knowing my personal information. These preferences become more obvious when you look at markets around the world that have adopted installment payments in a more meaningful way. In those markets, network-led solutions have led the way. In those markets, consumers have cited transparency, budget management, and affordability as the benefits of a network solution. Merchants have seen increases in ticket size, conversion rate, and overall volume lifts as high as 50%. Visa's vision is to bring a solution to Canada where the very foundation of the solution is built on consumer trust and responsibility. A solution that is designed with long-term ecosystem health and the long-term financial health of consumers and merchants in mind. A solution where the experience at the point of sale will be seamless and where the consumer can receive a reasonable installment offering that works within the confines of their existing credit card or eventually debit card. No new loans to remember and track, no new forms to fill out, no new credit checks required, no other brand is involved that the consumer does not know. A solution that is network agnostic, so it is irrelevant whether the payment card being used is a Visa card or not. An API-based solution that is simple to integrate, and with one integration, a merchant can enable installment offers for all of its customers without anyone needing to sign up for a new service. Simply put, it is a solution designed to enable a consumer and merchant to transact with each other as they always have, but with the added option of a transparent installment offering backed by the bank that they trust, the payment card that they like to use, and enabled by the connective capabilities of the Visa network. So how does it work? The user experience is really very simple. The consumer inserts their card at the point of sale. The terminal recognizes that they are enabled for an installment offer. The consumer chooses the offer that they'd like, either a one-time payment or an installment, and the transaction is complete. It's as simple as that. In an e-commerce setting, the transaction works the same way, except with the added benefit that if the consumer's card is on file with the merchant has the option to present an offer earlier in the shopping experience so that the consumer can consider that as they make their purchase decision. In summary, we're very excited to bring the Visa installment solution to Canada. Our solution is based on trust among consumers and merchants, simplicity in that it is easy to integrate, it doesn't require consumers to set up individually, and it blends into the existing checkout experience without sending the consumer to a different page. And scale, in that it is built to scale. Millions of cardholders enabled, no new credit checks, and it is network agnostic. We're now going to move to our panel discussion. Our 4 panelists are leaders in the Canadian payments industry and all people I've known for years and for whom I have a great deal of admiration and respect. Yann Jodoin is the head of payments, retail lending, and everyday banking and fraud at Desjardins. Yann is responsible for developing and managing innovative everyday banking and payment solutions to address the evolving needs of Desjardins members and clients. He's also responsible for commercial, international, and merchant payment solutions for the group. Mooney is the Senior Vice President of Credit Cards and Unsecured Lending at Scotiabank, where he oversees the overall strategic direction and growth of the business. He previously led the digital community of practice, where he was responsible for translating business objectives into digital priorities by creating new forms of value for customers. Rene Belanger is the President of Global Payments Canada. Since joining Global Payments in 2001, Rene has led the Canadian sales organization, first as Vice President and then as Senior Vice President, responsible for all sales channels, including the company's retention and account management teams. Rene has more than 30 years of sales and general management experience in multiple industries, having worked at IBM, Procter & Gamble, Pepsi-Cola, and CIBC. And last but not least, we have Diane Ferri, Senior Vice President of Cards at CIBC. Diane and her team are responsible for the CIBC credit card business, driving strategy, product and partnership development, and client experience. She also holds a leadership role within CIBC's overall payment strategy. Prior to joining CIBC, Diane was my colleague for 10 years with Visa Canada. It is great to see you, Diane. It's great to see you again, and it's great to see all of you. Welcome to everybody, and thank you for being here. Why don't we, let's get right into it with our panel discussion. Let's, I guess, maybe beginning with Diane, where I left off my introductions. Diane, you've been in the market with a post-purchase solution, the Paysit solution that CIBC has put out. Maybe you can talk a little bit about your observations and whether you've been surprised with the level of consumer interest.
Sure, thanks, Brian. Yeah, CIBC launched Paysit, which is a post-purchase solution, as Brian said. And the way that it works is that our clients can go into their digital banking site, view any credit card transaction through their site, and they can move any transaction that's greater than $100 into an installment plan at their option. It's pretty simple to do. It's a simple click and move. They get to select the plan that they want. And from there, all of their payments are then easy to manage and incorporated into their regular credit card payments. And then maybe just a couple of observations, Brian. I think it's exactly what you said earlier. Consumers, they love the flexibility. And we do tend to see that this solution is being used for fairly large transactions. The transaction size is significantly higher than what we would see on a regular credit card or an average credit card transaction. And the solution is being used for things like home renovations. That's been huge in the last year since the pandemic. Prior to the pandemic, as you said, travel was a huge category. And definitely the demographic we're seeing skews exactly as you presented. It's slightly younger, millennials, and then the Gen X as well. I think a couple of very interesting observations that we've seen is that those who do use it often. So they don't just use it once and they're done. They actually really do like it, and they've used it several times on average. And then there's also a cohort of clients that we see that never paid credit card interest, but we do see them taking up installments. And so we have improved sort of the lifetime value of those clients to our organization. In terms of the level of interest, I'd say I'm not at all surprised. I have a background. I worked for years at Citi in the private label business, and Citi was a big kind of installment financing provider. And these plans have been around for a very, very long time. I think what's changed is just that the technology has made things so much easier. It used to be, you'd go into a store and you'd select the sofa you want, and you'd sit down with, 35 pages of T's and C's and a clerk for 30 minutes and go through a very lengthy process. You weren't really too sure, what you were signing up for, how you were going to repay it, etc. I think now that technology's made things so much easier. The experience is so much more seamless and frictionless, and much easier for clients to take advantage of.
That's interesting. Thank you for that. It sort of pivots over to Yann, where Desjardins has been a lead player in Quebec for many years with the sort of highly acclaimed Accordé solution that has become really very entrenched in the Quebec market. So, you've been around this for a long, long time with during purchase solutions, a little bit different than what Diane just described with the post-purchase solution. Do you see the current momentum of what we're seeing now over the course of the last 18 months and 2 years and what we expect to see going forward as being sort of a step change for inorganic growth, or do you kind of expect it to just continue?
Well, thanks for having me, Brian, and hi, everybody. Yes, well, the Desjardins established Accordé about 25 years ago, and it was completely a different era, it was more a bank-oriented solution. So we were kind of pushing the complexity to the merchants and to the customers, and to the points of Diane's before. I think that people didn't really understand what they were signing up for. The industry was kind of stagnant and wasn't without a lot of innovations since the past 5 years. And now it completely changed. And to the Diane's point, technology has made it really, really a game changer. So I think now it's turning around. So it needs to be really easy. The evolution is in terms of how we can make the user experience, the merchants, much more better. And this is what we've seen that arrived to the market. If you put 25 years ago, there was Desjardins, also finance, if you remember, that was pretty much the game in town. And really the processes that was in place is what you see is what you get. Now, coming back to your earlier slide, now the market is pretty crowded in solutions. Fintechs have been really pushing us now to remove the frictions on our customers and also on the merchants. And basically, these elements are catalysts for market growth. So it needs to be really easy to use, fluid experience. Now it's really omni-channel. So the solution needs to be point of sales in stores, but online, on mobile. So it has to be this to be available through all those channels. And the customer experience now is that they should feel that same experience, whether they're in stores or on the mobile. Also, to Diane's point, it needs to be autonomous purchase experience. In the past, you have, kind of a clerk, somebody has to explain you, kind of like in the car business with F&I, with, we have all these big contracts to sign on. Now, the experience can be without any sales person assistance are required. And also the type of merchants have changed. It's going back a few years, if you want to have that kind of program, you need to be on a private label card, but no, like the small merchant didn't have access to those. And that's what we've seen a lot in the demands of our small merchants. They cannot establish their own private label card. It's a very complex, it's very expensive and demanding process, where now these solutions in the market, and that's pushed Accordé also to kind of like rethink about ourselves, is that how we can open up to more merchants and be more democratic about who can access it. And also there's a change in mindset in terms of shorter term payments plans. Not only like the big long 48 months, but we've seen a demands for 3 months, 6 months. So the financing view is changing significantly. More flexible payment options also, Brian, are required.
Thanks, Yann. And we're going to come back to, we're going to sort of double click on merchant motivations in a little bit. Brett, both CIBC and Desjardins have sort of been in market with branded solutions. Scotiabank has not. Having said that, Scotiabank has had a very active portfolio of customers, certainly for as long as I've been around the industry. What do you think is driving this big shift?
Thanks, Brian, for having us. It's great to be here with the other panelists. In our minds at Scotia, and a lot of the comments have been made by Yann and Diane. This is really just a refactoring of what was. And so face-to-face had installment plans for decades in Canada. We've seen them prevalent across the world, fairly predominant in Latin America. And so when we think about this massive shift that's coming to buy now, pay later, it's really a reinvention of that model. And I think there's probably 4 underlying catalysts. Again, some of them mentioned already. So first and foremost is customer value. And so customers are looking for flexible payment terms, shorter duration payment terms, lower cost payment terms. And, we've seen that, one advantage of buy now, pay later is it fulfills on a need that Canadians have, which is it better aligns required payments with typical income flow or paychecks. And so that's an advantage of taking a large purchase like a home renovation or a vacation and putting it into a buy now, pay later plan. I think the second is, and Diane mentioned, changes in B2B technology, right? So a lower flexible integration of tech stacks can be done within days and hours versus the old world where it took, months of negotiation, including long-term contracts and sometimes even co-brand relationships. Yann mentioned the third, which is the improvement in CX. So latency's gone. Decisions can be made in milliseconds. They don't take days to determine borrowing or credit quality. And then lastly, I think the one that hasn't been mentioned is the great migration to digital. And so we've seen a massive shift. COVID's only accelerated it. We now have about 60% of all purchase volume going through digital or e-commerce, non-face-to-face channels. And as we all know, that's a much easier path to integrate a solution like buy now, pay later. It doesn't require training of frontline sales forces. And so while it's peaked around 60% of purchase volume through the pandemic, a lot of those habits will be formed for the long term. And so we envision that, a lot of those habits will be durable and will stick with us over the moderate term. And so the ecosystem is developing rapidly. We're confident that at Scotia, we're well positioned across all 4 of those dimensions to deliver some solutions over the coming months.
That's great. Rene, just kind of flipping to the merchant side, how do you get merchants comfortable with this? How do you make them aware of this? Most merchants are just trying to keep pace and manage their inventory and their staff and just kind of get through the day.
Yeah, thanks, Brian. How do we make merchants comfortable with this? I think they just like Brett and Diane and Yann said, I believe merchants are already comfortable with this. Accordi was created about 25 years ago. If you look at other solutions, they've been in place for a very long period of time. Brett talked about Latin America, and in your presentation, where we've seen that over 40% of the transactions are buy now, pay later type of transactions. So in general, merchants around the world are comfortable with this. In Canada, they have been using this for many years. Now, how they use it has changed. The technology has changed. So I believe that moving forward, you'll see a greater adoption, like we've seen over the past year, like Brett mentioned about COVID, the impact of COVID. So I think this will continue to grow, will continue to change. Technology will create changes and a more rapid adoption of this solution in Canada. But to answer your questions, I really believe merchants are very comfortable with this. It's really driven by the cardholder or the consumer. Consumer will ask for this form of payment, and they will ask for this type of payment to be done via the technology or virtually rather than in person moving forward. We believe that we'll see a lot more of that.
Flipping sort of the same theme, but flipping over to the consumer side, Diane, many options in market right now. Fintechs that are coming along all over the place. Visa's coming into market with their own solution, as we talked about. It's just a lot of names. Do you expect there to be confusion among consumers? I mean, from your answer earlier, it didn't sound like there would be, but What do you, how do you think about that?
I think initially, I mean, being a big online shopper myself, some of these new names that you would see, while shopping for, a sweater or a coat, popping up on the merchant site, it was a bit kind of confusing, but at the same time, maybe led to a bit more curiosity. And then I think, like I've never taken an installment from a fintech, but lots of people have. I also think we've heard from clients there's concerns, and they're similar to the ones that you've raised as well, Brian. It's like, what are they doing with my data? Who are they? What are the hidden fees? How am I going to repay this? Will I forget about it? What happens if I forget? Can I cancel it? And then if there's an issue with the merchant, I don't really have a really good line of recourse the way I would with my Visa card. So I think, confusion is part of it, but I think, there's curiosity and then there's also concern. I think the good news is, as, more and more of the financial institutions, known financial institutions, enter the market with, Visa solution or other well-known brands, I think that those brands give some overall legitimacy to the category.
And Yann, from a merchant perspective, would you say that they would, sort of continuing on with what Diane just mentioned, would you think that merchants would say the same thing?
Yes, I do. For a merchant, there's their goal in this is always to make sure they can increase their sales and also their average ticket. So there's two main strategy for merchants, and we've seen that. We have on our card day thousands of them on installment now, and first is, can I differentiate myself to my competitors by offering these installments? So we've seen that more and more. It's kind of a differentiator strategy. And for others is also how to meet market standards. We know in the furniture business that now, if you go in, as Diane pointed out earlier, if you want that sofa, well, there's an expectation you will be offered some kind of financing at point of sales, and so we know, for example, for furniture that for some of them, 50% of their sales is on financing. So. I think to offer the flexibility to their customers who will require it is now an absolute. And you've mentioned Brett, Latin America, and Rene is also in Latin America in his scope. But we've seen now that it goes from clothing, very small purchase tickets to the very large ones. So I think there is less and less discriminations for merchants about in Canada we had before that kind of like shame of going under a certain amount of ticket for financing. I think this is gone now, and I think for merchants now it opens up a completely new category of sales for them.
Yeah, it's really interesting that you mentioned that. I remember it used to be embarrassed to buy a pack of gum and put it on, like you wouldn't dream of putting it on a credit card because that would be embarrassing to the person behind you in line. Mm-hmm. But now it's like now you're more embarrassed to actually pull cash out because you feel like you're kind of slowing everything down. Brett, let's just talk about banks are not nimble. Banks are slow. Fintechs are nimble. They're scalable. They're very easy to deploy. They react quickly, or so the story goes. Can a bank-led or a network-led solution compete with fintechs?
It's a good question, Brian. in a word, absolutely. Right. Historically, large incumbents were somewhat shackled by legacy platforms and processes, right, which restricted velocity and I'd say the pace of innovation. But I think those days are behind us. At Scotiabank, we've gone from deploying code 3 to 4 times a year in our digital or customer-facing technologies to we can deploy code daily, right? And so I think we're matching the pace at some of these fintechs. certainly on the ability to rapidly develop and deploy code and deploy features for our customers. In fact, I think a bank-led solution built on a network delivers more underlying value to Canadians for 4 key reasons, many of which you covered in the opening. Right? I think the first is frictionless scale. So as you mentioned, there's no new form, no credit check, right? It supports responsible lending and borrowing habits, and it can be turned on to millions of merchants very quickly. Second, secure, right? And trust. And Canadians have trusted Scotiabank to keep their information secure for over 189 years. It's what we live and breathe every day. It's the first principle of any project or any design. Third is, having multiple buy now, pay later plans across a broad ecosystem, I think fractures a customer's ability to truly manage their finances. And, we believe in comprehensive, sound, well-structured advice programs for our customers. And so I think what you'll see is, as the banks move more into this space, a greater adoption of some of those bank programs. And then lastly, another point you covered, and the fourth point of why I think the banks are very well positioned, is it offers the flexibility. And so you mentioned your opening remarks, there's 3 models, right? There's pre-POS, there's at POS, and there's post-POS. We've already seen evidence of all of those working across the ecosystem, and the banks, in fact, are able to offer all 3 of them, unlike some of the entrants that are non-banks. So I have no doubt that the 2020s will be defined by how quickly fintechs can scale versus how fast banks can innovate. But I can tell you where my money is now, and I firmly believe that the banks are in the pole position.
That's fantastic. And Rene, do you have the same sense of optimism? And specifically, I'd like to find out from you, do you see this as being sort of an e-commerce play, a point of sale play, both?
Thanks, Brian. Listen, a couple of things. Just to add on what my colleagues were saying here, I think a merchant will always assess a solution provider based on several points, and Brett touched on those. So you got the trust, you got the credibility that is really important. I think that a merchant will look at who is their provider, what kind of trust this provider has with consumer, and what kind of credibility do they have. Then it has to be simple. So we talked about something that is frictionless. So it has to be simple, not only for the merchants to use, but also for the consumer. It has to be easy to use. And then the cost. How much does it cost me to process or to accept this type of service? Or how much revenue can I make out of it? So, and I believe that merchants look at solutions on several factors, but those 3 usually come up. Now, will it be better, to answer your question, or is it more compelling on e-commerce or face-to-face? I think it's about the same. I would say they're both very compelling. Historically, if you go years ago, we talked about it. This is not new. This is not a new offering to merchants or to consumer. It has been in place for many, many years, more in a traditional environment, a face-to-face environment. Now it's moving just because the world has changed. Things are progressing, especially with last year with COVID. We've seen a big swing to e-commerce. So I think we're seeing a lot more e-commerce transactions and a lot more demand for those type of solutions in a virtual environment than in a face-to-face environment. But your question is it both? Is it compelling for both e-commerce and face-to-face? I would say it's equally compelling for both.
Yeah.
Brian, if I can add, from a merchant perspective, Rene has brought in a good point in terms that how it can increase my revenues, but also how the rate is interesting for me or for my customer, but also how fast the decision can be made. And we're all used now with the credit cards. You go, you swipe, or you have an authorization, and it's approved. So I think we're to the point of Brett. The friction that was in the system from banks before is that, at point of sales financing, you need to have a new contract and have approval process. You need to wait. And that was really, really pain point not only for the merchants but also for the customers. Well, I'm going to be approved, I'm not going to be denied, should I have an increase of my limit? Now going through the same processing than the credit cards, there is an expectations also from the customer and the merchant that the speed of how this is going to be processed will be exactly mimicking the one we're seeing a credit card, the regular credit card transactions. So I think this is really where we're seeing it now. And even though some fintechs have improved on the friction points that we've seen in the past, they still have reproduced some of the issues we had in our traditional world of financing, is that we have to go to the credit bureau, get an approval, get a credit line established, and then move on the transactions. Where here it's completely flawless.
Yeah. Yeah, and from our perspective, we see that marrying very well with the whole concept of frictionless transaction. I mean, on some level, you actually are adding a little bit of friction into a transaction because we're going from right now, the vast majority of transactions are contactless. And so you're going from this experience of being completely contactless to now, in some cases, inserting this quick step into the process. And so we're laser focused on trying to make that as seamless as possible. But our hypothesis is that the experience today at the point of sale is so frictionless and so slow that that there is a little bit of room to introduce that the net benefit actually outweighs the extra split second that it takes to say yes or no. Let's flip to Brett sort of got in a little bit to the sort of concept of ecosystem health and some of the things that are really important at Scotiabank. Diane, I'd like to I'd like to hear your perspectives around consumers. Is there any concern around consumers overextending themselves with these kinds of options?
I mean, I think I do have that concern, in particular when you think about maybe younger consumers who really haven't quite got the experience with managing credit as maybe a more mature consumer would. And I think we've seen in a market like Australia where, regulators are starting to look at this very carefully to say, are people getting in over their heads? And then, younger people just maybe unable to, buy food and grocery because they've got so many payments that they easily clicked on when shopping for things like, a sweater. So I think we do have that concern. I think there's a couple things that we would, want to consider. And one is, I think there has to be, kind of credit bureau reporting on all of these sort of buy now, pay later plans so that lenders can see a total picture of a client's indebtedness before giving them credit. And I mean, I think the second thing is, all of us regulated financial institutions follow a set of, rules, regulations, policies that are all designed to protect consumers, protect them from themselves in some cases. And it's important that, we're all following those and, we're monitored and we ensure we follow those. It's important that all the players in the ecosystem are following the same rules and regulations, and that will help protect consumers.
Yeah. It sort of the concept of ecosystem health. Maybe Brett, you can go back to that a little bit more. From a Visa perspective, I can tell you that there's not one decision that gets made, big or small, that is not looked through the lens of how is the decision we make here going to impact the long-term health of the ecosystem for the benefit of Canadian consumers and merchants, for our business, for our ecosystem partners. Brett, I'd like to go back to you because you did touch on it a bit. Can you talk a little bit about ecosystem health and kind of what it means to you?
Yeah, I think, Brian, from a buy now, pay later perspective, at the highest level, the long-term health of the ecosystem has to effectively balance the needs, right, and interests of all stakeholders, including both short and long-term objectives. And, in addition to, I think, the critical catalysts such as Visa, right acquirers, POS technologies, I think there's four main stakeholders. The first is customers, right? They must consistently see value in existing solutions beyond what exists in the market today. The second would be the merchants. I think, Rene mentioned it. They're keen, and Yann, they're keen to improve conversion rates and basket size. Third are buy now solution providers, could be banks or non-banks. And then fourth, regulatory bodies. And Diane mentioned this, to make sure that we have a healthy ecosystem, and what we've seen across the globe, in particular Australia, as well as the UK even, the focus has been on the last two stakeholders, the regulation as well as the buy now, pay later providers. And increasingly, we're seeing concerns for three reasons. I think one Diane mentioned, right? The credit bureau transparency, where it's not where we think it should be in terms of reporting the overall financial picture of a consumer, to make sure that collectively we're making the right decisions for Canadians. The second is, that keeps me up at night is the ability for non-bank buy now, pay later solutions to allow consumers to pay with credit. And so paying credit with credit cards is something that we don't believe is a healthy long-term option. And then lastly, I think we see it in the numbers. There's consumers, these plans can get away if not well managed. The non-bank providers have losses in the 2 to 6 times higher ratio than a bank credit card portfolio. And so for all of those reasons, I think, and as Diane mentioned, it's important that we have, the appropriate amount of oversight and governance on this type of solution in the market. Ultimately, we want to help our customers become better off every day, every week, every year. And so we need the right guardrails in place to make sure that ecosystem is healthy over the long term.
Yeah, that's really very well said. Thank you, Brett. Rene, I'd like to ask you whether you see all of this as being sort of the entry of a network-led solution, if you will, as a game changer for your merchant base.
Well, I think it is. I mean, like I mentioned before, when you think about this, merchants have a lot of different type of criteria to assess a solution. And obviously, the three that usually come up all the time is trust and credibility, simplicity, and also the cost. Cost is expense and revenue that they can generate from this. So when you think of the Visa solution, you have just like you mentioned in your presentation, you got the trust, you got the credibility, both on the merchant side and also on the cardholder side or the consumer side. If you go to a website and you try to buy a product and you see the Visa brand supporting a deferred payment transactions or pay later transaction, the level of comfort might be, I'm not saying it is, but it might be higher than if you see a name that you never heard before or you don't easily recognize. So there's a confidence level that exists. And also simplicity. We did talk about simplicity. So the ease to use, either for the merchant or the consumer, is critical. So you want to have one point of contact. You want to do one transactions, one click. So I believe that it will be a game changer in that aspect.
I mean, we see it the same way, and we certainly hope and plan that it will be. But I know that we have the collective. There's a bit of a history of collaboration in the ecosystem in Canada, and we've got I'm always amazed at just how smart our clients are. And when we build a solution like this, it's with our clients in mind, and certainly with the input of our clients. So we're really excited with what we've got and to kind of put it out in the market. I think I'll maybe bring it to a close, but I want to ask this question first of Yann. You've been in market with the Accel solution, as you said, for 25 years. Any words of advice for the ecosystem as we move into greater adoption of sort of during purchase options?
Well, I think that from our perspective, the brand awareness is extremely important. For people to understand at point of sales or at checkout, the product and how the product works and how it facilitates their buying process. So I think this is one that, in Quebec, people say we are doing an accordé, we're not doing a point of sales financing. So that was being a big winner for us. Always keep the users, the experience top of mind to facilitate, the adoptions, and ease to use is always key. I think that we spoke about it, but we need to find a balance between offering flexibility to cardholders, but also not encouraging excess spending. To the point of Brett and Rene, we should not in Canada bring our cardholders to a payment-based consumer in terms of their budgeting and the way they think about how they spend. We've been quite good about this compared to other, like I think in Brazil, for example, where people think about payments and not about overall. And we need to be transparent to increase loyalty and the good experience. No hidden fees, easy to understand process, terms and conditions needs to be really easy. So that will be my advice. Brian.
Excellent, thank you. I don't want to put anybody on the spot, but does anybody have a closing comment that they would like to make?
Yeah, I think, Brian, just to build off what Yann said, I think we've got a market moment ahead of ourselves, right? And so with COVID, we've all seen the trends. Canadians, they've had a look at their balance sheet. They've improved on average their overall savings, right, and debt levels. And so we have the opportunity and the responsibility to continue to help Canadians with that trajectory. And so I think that's exactly what this type of solution can do that you described in the opening. And so we're very excited to see it move into the market.
Thank you for that. Diane or Rene?
Well,
yeah, go ahead,
Rene. Please, go ahead.
I echo what Brett said. I think it's an exciting time for us. We see that there's value there for customers, for merchants, and I think we're all kind of poised to jump on it, and maybe in a bigger way than we already have. So I look forward to the future.
Thank you. Rene?
Yeah, I would say the same thing. I agree with Yann, Brett, and Diane. I think this is a good time for merchants. I'll talk more on behalf of merchants here. I think it's a good time for merchants. It may drive more revenue for them. And if you think of 2020, it has not been such a great year for most of the merchants. So product like this one definitely will increase the average ticket, will increase more purchases, and will be good for the economy, I believe.
That's exactly what we're hoping for. Listen, I want to thank all of you for participating. This is, it was, I think, super helpful. Frankly, it was helpful for me just even having this conversation. And I hope that everybody else that has an opportunity to view this finds it helpful for them as well. Thank you all, and we'll see you again soon.